People ask me this all the time. What's the best investment right now? I always give the same answer, and it's probably not what you would expect. The question itself reveals a misunderstanding about how real wealth is built. And by the end of the video, I'll show you why the question is the wrong one and what the right question actually is. My name is Quentin Chambers. I'm a certified financial planner and chartered investment manager. And over the last decade, I've helped investors reframe the question, what's hot right now, to what fits my plan? Because those two questions lead to very different portfolios and very different outcomes. The phrase best investment right now assumes a few things. That one, it's a noble answer, that the answer is the same for everyone, and that getting in now and getting out later is how real wealth is built. Now, none of those assumptions are true, and the search for the best investment now has led more people to underperform the market than almost any other behavior. When you're asking this question, you're asking for a market prediction. You want to know what stock or cryptocurrency is going to be the next big thing. And if you want the honest answer, nobody knows. Not me, not the best fund managers in the world, and definitely not the market economists that you see on TV. But let's dig deeper than just nobody knows. There's a structural reason why that question can't be answered, and it does matter. Markets are forward-looking, meaning stock prices today reflect all currently known information about the future. If everyone expects tech stocks to return 30% this year, the price would already reflect that. The actual return would be much lower. The only way to identify the best investments in advance is to know something that the market doesn't. That's called an informational edge, and it's almost impossible to maintain consistently, especially legally. Even the best professional money managers in the world with teams of analysts and sophisticated models fail to consistently outperform the markets over long periods of time. The evidence on this is overwhelming at this point. The other issue, and I think the most important, is the best investment depends entirely on your personal situation. 35-year-old accumulating wealth has different needs than a 65-year-old drawing down their investments. There is no universal best investment. So if that's the wrong question, what should we actually be asking? The right question is, what is the best portfolio for my goals, timeline, and risk tolerance? That question has a real answer, and it doesn't require predicting the future. And what's important to remember here, it's not because it's exciting, it's because it's reliable. The best investment isn't going to be a stock tip or a hot sector. It's a process with clear goals, appropriate allocation, low cost, disciplined rebalancing, and staying the course when markets get scary. When it comes down to finding those moonshots or once-in-a-generation investment, you're probably just as good as buying a lottery ticket. The search for the best investment now is expensive. Here's how you can redirect that energy. Stop trying to find the best investment and start building the best portfolio for your situation. The difference here is so profound. It's all about focusing on what you can control, like your savings rate, your asset allocation, your costs, and ultimately your behavior in volatile markets. One of the best ways to do this is to have a written investment policy statement that defines your goals, your asset allocation, and your rebalancing rule. That's the first easiest thing that you can build. If this gave you a more clear way to think about investing, make sure you hit that like and subscribe button for more videos just like this. Until the next one, take care.